Now let's discuss statute of limitation. Let's read. It is a time period during which the IRS, Internal Revenue Service, can assess additional tax or allow a claim for refund by the taxpayer. So you file your tax return. You show an income of, let's say, $200,000, pay tax on that. Now, IRS audits your tax return and discovers that you have not reported certain income and you have to pay more tax, additional tax. So IRS assesses additional tax, will ask you to pay more tax, but within how much time? Within how much time? That is statute of limitation. This time is 3 years. 3 years from when? From the date your return is filed. The rule, underlying statement. They have 3 years time. Although there may be various exceptions, we will talk about those. But how much time IRS has to assess additional tax? How much time you have to claim a refund? So you file your tax return, do not claim any return. So you file your tax return, pay taxes. Later you discover that you have not claimed certain deductions. Now you're eligible for refund. How much time you have to claim a refund? Statute of limitation comes into picture. How much time you have to claim a refund? All right. So we are talking about two possibilities. You file your tax return, pay your taxes, but IRS assesses more tax, or later you discover that you are eligible for refund. How much time you have to claim refund? How much time IRS has to assess additional tax? So here, just understand that IRS has 3 years from the date you file your tax return. So whenever you file your tax return, IRS has 3 years time to assess more tax. And in case you file your tax return before the due date, before the original due date. So if you file your tax return, before the original due date, it is considered filed on due date. Let's say you are a calendar year taxpayer. You have to file your year 2021 tax return by April 15, 2022. So 2021 tax return filed by April 15, 2022. But if you file your tax return before this date, let's say you file your tax return on April 10th, 2022. For the purpose of statute of limitation, when it is considered that you have filed, it is considered that you have filed on April 15th. You file your tax return on April 1st. It is considered that you have filed your tax return on April 15th. You file your tax return on February 1, 2022. It is considered that you have filed your tax return on April 15th, 2022. You file your tax return on January 15th, 2022. It is considered that you have filed your tax return on April 15, 2022. So if you file your tax return before the original due date, it is considered that you have filed on the due date. And 3 years period will run from due date. I will talk about this a little bit more in a moment. Okay, so for assessing additional tax, IRS has 3 years time, and 3 years time is from the date you file your tax return. Now this 3 years time period is increased to 6 years in certain cases. The limitation period is 6 years, or the statute of limitation is 6 years from the date return was filed. So the period is increased to 6 years, but if you omit to report an amount that is more than 25% of gross income reported by you, So you omit to report certain income. And what percentage you omit to report? 25% of income actually reported by you. So you omit to report certain income, and what you omit to report? More than 25% of your gross income. So let's say you reported a gross income of $100,000. This is what you have reported. Now, IRS audits your tax return and discovers that your income is not $100,000, but it is $120,000. They want to impose more tax on you because you have underreported. How much you have reported less? $20,000. How much time IRS has to impose additional tax on you? How much time IRS has? 3 years. Now, let's say it is not the case. IRS audits your tax return and discovers that your income is $130,000. You have underreported. They want to impose more tax. How much time they have? 6 years. Why? Because now it comes under this exception. That is, you have omitted to report more than 25% of your income actually reported. You have reported 100,000 when you should have reported 130,000. You have underreported how much? $30,000. This $30,000 is more than 25% of gross income. That is 25% of this amount, $25,000. Because the omission is more than $25,000, IRS has 6 years time. Okay, now there is one more situation when IRS has 6 years to assess additional tax on you. And it happens when the omission is more than $5,000 that is attributable to foreign financial assets. So if you have income from foreign financial assets and you underreport, underreporting is more than $5,000, the IRS has 6 years time to assess additional tax. So 6 years from the date return was filed. Let's say you have a foreign bank account and you get interest on foreign bank account. Let's say interest on foreign bank account you get is $5,100. Now this is more than 5,000 and you do not report this $5,100 interest on foreign bank account. You do not report this. Later IRS discovers this, that you have not reported income that is attributable to foreign financial assets. Now IRS has 6 years time to impose additional tax because you have omitted to report more than $5,000 that is attributable to foreign financial asset. You have a bank account in a foreign country, you get interest income of $5,100, but you have not reported. Because the omission is more than $5,000, IRS has 6 years time. Now, what about refunds? So if a return is filed, you may file a claim for refund within a period of 2 years from the date tax was paid, or 3 years from the date return was filed, whichever is later. So you know that statute of limitation is 3 years from the date return was filed. In case of a refund, you also consider 2 years from the date tax was paid. So later of these two is the statute of limitation in case of refunds. Now there is no period of limitation if you file a false return, fraudulent return, or willfully evade tax, or do not file a return. So if you do not file a tax return, the statute of limitation runs forever. If you file a false or fraudulent return or evade taxes, statute of limitation runs forever. It is not 3 years, it is not 6 years. It is forever. They can assess additional tax anytime, even after 20 years, even after 30 years. Any questions? All right. So statute of limitation is 3 years from the date you file your tax return. It may be 6 years if you underreport your income and the underreporting is more than 25% of your gross income, or you do not report income more than 5,000 that is attributable to foreign financial assets. And the statute of limitation runs forever if you do not file your tax return or you file a false or fraudulent tax return or evade taxes. Let's say you filed your tax return on April 9, 2021. So you file your tax return on April 9, 2021. Then your return is considered filed on April 15, 2021. And SOL ends on, your statute of limitation ends on April 15, 2024. If you file your tax return before April 15th, it is considered filed on April 15th, and statute of limitation runs from the due date. Let's say you file your tax return on April 15, 2021. It is filed on April 15, 2021. SOL begins on the same day and ends on April 15, 2024. Suppose you file your tax return on April 20th, 2021. You have not applied for any extensions. Return is considered filed on April 20th, 2021. So you file your tax return on April 20th, 2021. It is considered filed on April 20th, 2021. And SOL begins the same day. It ends on April 20th, 2024. You have not filed 4868. Suppose you file your tax return on April 20th, 2021. You file 4868 by April 15th. So you file your form 4868 by April 15, 2021, and then file your tax return by April 20th, 2021. Now, again, very similar, no change in SOL. The return is considered filed on April 20th, 2021, and the SOL ends on April 20th, 2024. Now, let's also consider holiday rule. You guys know that if April 15th is Saturday, Sunday, or a legal holiday, then the due date is extended and the new due date is the next business day. Let's see 2018. So you are a calendar year taxpayer and you have to file your 2017 calendar year tax return. So 2017 calendar year tax return has to be filed by April 15th, 2018. April 15th. Now, April 15th, 2018 is Sunday, if you see. This is Sunday. Because April 15, 2018 is Sunday, you cannot file your 2017 calendar year tax return by April 15, 2018. You can file it by next business day. What is the next business day? Is it 16? Let's say 16th is also a holiday. This is a holiday. So April 15th is Sunday and April 16th is a legal holiday. Your due date to file your tax return is April 17, 2018. All right. So let's say you file your tax return on April 10th, 2018. Then it is considered filed on April 15th because a return filed before April 15th is considered filed on April 15th, and statute of limitation starts running from that date till April 15th, 2021. Let's say you file the tax return on the due date, that is April 17th. You cannot file your tax return on 15th. It is Sunday. You cannot file your tax return on 16th of April. That's a holiday. But you're filing your tax return on April 17th, 2018. Now, because you have filed after the original due date, that is April 15th, although you have filed it timely, it is timely filed. But statute of limitation will run from April 17th, from the date you file that return, and end on April 17th, 2021. Now let's discuss postmark rule. Mail rule. Now, what is this postmark? So you do not go to the IRS office and file the tax return, but you put your tax return in an envelope and post it. So there is a gap. There is a gap between the date you post your tax return and the time it is received by the IRS. Now, how the statute of limitation works in that case? So you put your tax return in an envelope, post it, post office puts a stamp on that, puts a mark, postal mark that has the date on it. So there is a postmark date. And then it is received by the IRS. So we'll consider a few things. Let's say you post your tax return for the year 2020 on April 5, 2021. It is received by the IRS on April 11, 2021. So you put your tax return in an envelope, post it, post office puts a mark on that, and it is dated April 5, 2021. All right. So you post your tax return on April 5, 2021. It is received by IRS on April 11, 2021. Any return that is filed before April 15th is considered filed on April 15th, and statute of limitation begins on this date. It will end in 3 years' time. That is April 15th, 2024. So which date is relevant here? Consider this. Consider April 5, not April 11. The date you post the return is important, is relevant. That is considered. Basis this, you determine your statute of limitation. Let's take another example. You post your tax return on April 11, 2021, received by the IRS on April 18, 2021. Again, this is relevant, not this. Your SOL period will begin on April 15, 2021 and end on April 15, 2024. The date it is received by the IRS is not that relevant here because it is posted before the due date. It is posted before the due date. Let's say if you post it after the due date. Due date is April 15, 2021. You post it after it. And it is received by the IRS on April 21. Now, when will the IRS consider that you have filed your tax return? They will consider that you have filed your tax return on April 21 because your due date is gone. Because your due date is gone, the filing date is the date on which the IRS receives your tax return. IRS receives your tax return on April 21. This is the filing date. This is the date for SOL purposes. This is the date on which SOL begins. Statute of limitation will end on April 21st, 2024. Because it is not timely posted. At least a taxpayer should post his tax return by April 15th. If the taxpayer does not post his tax return by April 15th, IRS will consider the date on which the tax return is received by the IRS. All right. Any questions? Now let's also consider holiday rule in this. Let's say April 15th is Sunday. That what happened in case of 2018. So for 2017 calendar year tax return that is to be filed in 2018 and April 15, 2018 is Sunday. April 16th is holiday. Due date to file the tax return is April 17th, 2018. All right. Now let's see how it works. So you post your tax return. Then it is received. And SOL ends. All right. Let's say you posted your tax return on April 9, 2018. It is received on April 13, 2018. When it is considered filed, this date is relevant. Basis this, we'll calculate that yes, it is filed timely on April 15, 2018, and the statute of limitation begins. It ends on April 15, 2021. Let's say you filed on April 12th. It is received by the IRS on the due date, that is April 17, 2018. Because you have timely posted, this date is relevant. It will begin from April 15, 2018, end on April 15, 2021. You again timely post your tax return, but it is received by the IRS little late. It is received on April 19th. But because you have posted it timely, it is okay. It is considered filed on April 15, 2018. SOL begins on April 15, 2018 and ends on April 15, 2021. Let's take one more case. So you post your tax return on April 17th, received by the IRS on April 20th. Now you have timely posted your tax return. Consider this date. This is the date basis which you will calculate your statute of limitation. So your of limitation will start from April 17th, end on April. You post your tax return late. You post it on 24th. Received by the IRS on April 27, 2018. Because you have posted your tax return late, IRS will consider the date it is received by the IRS, that is April 27th. Your statute of limitation will run from April 27, 2018 and end on April 27, 2021. So if a return is timely posted, consider the date on which it is posted. But if it is posted late, then consider the date it is received by the IRS. Now let's also consider extensions. So you file form 4868 and your extended due date is October 15, 2021. Let's say. So you post your tax return, let's say in May 10, 2021, because you have a lot of time, you have filed for extension, you can file your tax return by October 15, 2021. You post your tax return on May 10, 2021. Received by the IRS on May 14, 2021. It is timely posted. Because it is timely posted, consider this date, May 10, 2021. And this period will end on May 10, 2024. You post it in October 10, 2021. Received by the IRS on October 18th, 2021, let's say. Again, because it is timely posted, October 15th was the due date. But it is timely posted. Because it is timely posted, consider October 10. Let's say you post the tax return late. Received by the IRS on November 2nd, 2021. Now, because you have posted it late, consider November 2nd. Consider filed on November 2nd. Statute of limitation starts running from November 2nd, ends on November 2nd of 2024. Now, how your statute of limitation is impacted because of superseding tax return or amended tax return. So you file your original tax return and then file a superseding tax return. Then will it impact your statute of limitation? Answer is no impact. Your superseding tax return has no impact on statute of limitation. So if you file your original tax return by 1st of April, your statute of limitation will start from April 15th. It does not matter when you file your superseding tax return. So your superseding tax return has no impact on statute of limitation. Your statute of limitation is considered when your original return was filed, not when your superseding tax return was filed. All right. Now, so you file your original tax return and then you file an amended tax return. What impact it has on statute of limitation? Again, generally no impact. Generally no impact on statute of limitation, and your statute of limitation is 3 years from the date original return was filed. Original return, not your superseding tax return, not your amended tax return. So this we are talking about original tax return. But if you file your amended tax return in last 60 days of the SOL period, then IRS gets additional 60 days from the date you file your amended tax return. Okay, let me explain this. So your SOL period, for example, in this case, your SOL period ends on November 2nd, 2024. And if you file your tax return in last 60 days of the SOL period. So if let's say, for example, you file 1040X on October 1, 2024. Because you file an amended tax return in last 60 days, IRS will get additional 60 days. IRS gets additional 60 days. So IRS gets additional 60 days. And these 60 days starts from October 1st, 2024. This is because the amended tax return is filed on October 1, 2024 in last 60 days. Let me give you another example. Suppose you file 1040X on January 1, 2024. Have you filed 1040X in last 60 days of the statute of limitation? Answer is no. IRS does not get additional 60 days. So in this case, statute of limitation will end on November 2nd, 2024. All right, so students, when you're filing your tax return, you have to consider a lot of things. You have to consider your tax year, whether it is an annual accounting period or a short period. If it is an annual accounting period, whether it is a calendar year or a fiscal year. And also in fiscal year, you have a choice to select 52, 53 week tax year. In certain cases, you have to choose calendar year. For example, if you're not maintaining your books of accounts, you have to choose calendar year. Also, you have to consider the postmark rule, mail rule. You have to consider superseding tax return and amended tax return. And I'm sure you will consider all this when determining your due date and whether the return is timely filed and when your statute of limitation starts and ends. Any questions? All right. So students, I hope this session was meaningful. We'll connect with you next week. Have a great day. Have a great week. Goodbye.